All right, good evening. This is, I think, session number 8 for March 21st, 2016 for the Swing Trade Workshop. Guys, I've got everybody on mute. If you need to shout out or something, just go ahead and give me a text. All right, good to see everybody. All right, so this is the agenda. We'll follow the usual stuff. We're going to preview next week's homework. I'm going to make some commentary on some of the message traffic, the two pieces of message traffic in the board that I wanted to address tonight. I want to give some insights for the week. We'll review some trades from last week, and update that swing list. And we'll just drive on with the usual suspects here. All right, so the first thing I want to cover is reviewing next week's homework. And it looks like, most people at least looked at the curve. If you haven't done that one, I think you'll find that that's a helpful little exercise. It can be frustrating, makes you think, but it's a helpful little exercise. So carry that one over if you haven't seen it yet. There are some follow-up strategy videos that are worth looking at. If you haven't seen these two yet, really important that you watch these two videos. The Margaret's coaching session and also Lisa's coaching session. I just +1 to Lisa. Just awesome job on your presentation. That counts as your presentation for this workshop, Lisa. I just thought you did a fantastic job on it. There's a ton of really good material in there. And so last week I said I would add some videos on the RLCO and the Bollinger Band. I didn't finish the last one till today, and I think they're really good. And so I've highlighted the ones that I really want you to get this week. This whole block probably should swing down into March 26th, but these are the ones that were recently added. So the RLCO framework example, part 1 and part 2. Part 1 is really the logic chain behind it, and part 2 is how it looks to set up your screens at freestockcharts.com. And then some narrative I give as some stream of consciousness stuff of things that I'm looking for, and hopefully it will give you a fresh and a comprehensive look at the use of the regression lines. And I really reviewed some of the RLFF stuff in there too. I can't avoid that. And then the two sections, the two videos on the Bollinger Band River framework. Added those here this week also. And so number 1 addresses it from a conceptual text basis, and the second part, part 2, is how to actually set it up on your screens, and then some interpretations of it. And then at the end of it, I discuss a few trades in there where I've combined both the RLCOs and the Bollinger Bands. I do spend some time talking about the PSAR and the volume at price indicator. So I really think that those 4 taken together will give you some fundamental insights into that lens, that common operating picture. It may be an uncommon operating picture, but sometimes you got to take it apart to see it correctly and then put it back together. So I would watch those maybe several times. I did one last night on updating the weekend update to the swing portfolio. So the previous update was Wednesday, so this was as of the closing prices on Friday. And then I'm going to do another one tonight, see what changed today. So carry those ones highlighted in yellow over. And again, if you haven't seen Lisa's and Margaret's coaching session, I think they're really well done. And so then we'll take a look at, we'll add these two in there too, calibrating the normal move, and then the use of the gap stat and the intraday ranges, sort of improving our performance on day one of the trade and then the last day of the trade, how to get that intraday extra boost of performance through the use of the gap stat. All right, so those are the videos and the homeworks going forward. The following week, we only got a couple more sessions in here. There's an April 3rd in there too. Sorry, 3 more sessions. And this is going to be really refinement. I'm looking for topics from you guys. If there are things that you want me to reinforce or additional things to cover, or if at this point we're kind of really into trade framing, trade managing, trade accounting, polishing up our own processes. I'll give that some thought. If there's other things that you feel that you still need to hear or to be reinforced, please get those on the right board for topics. Okay. All right, moving on. All right, so something I just want to reinforce from market conditions. We talked a little bit about this one last week, but man, it's just really, really important. This is like page 7 in that daily from this weekend. So this is that slope over the last 10 years. And this is that same slope, but only the last 200 days. So it only takes like, it takes like this portion of it. This portion that I'm highlighting in yellow is the portion that appears down here. All right. Now, one of the things that we've had in the last, 30 or 40 days is volatility that has gone from extraordinarily high to almost quiet. And that same move has featured this move. That there is a inverse correlation, a strong correlation, strong inverse correlation between volatility and price moves. And by the same token, this spike in volatility here is what caused these negative waves here. And I want you to notice how smooth that indicator is. Gives us nice clear turning points when it crosses its own 10-period moving average at a distance more than 1 SD from the mean. And my concern is that we're probably getting closer to that rather than farther away. We are already among the top 3 steepest upward moves over the last 30 days, as we've seen in the last 10 years. And the previous one was one of those also. That's this one. And we're just coming out of conditions where we had the maximum downward sloping move. So the sharpness and magnitude of that move in both directions multiple times, the sudden down, the sharp up, the sharp down, the sharp up, has left a lot of people reeling. That's, but I will tell you that this indicator helps us get on the right side of the wind. And we really want to pay attention to that. I think this is pretty strongly correlated with that risk Z as well. So when we're thinking about our swing trades, let's always bear in mind that market mosaic. And then that point is reinforced so strongly in Lisa's presentation on her coaching session. That's really mandatory reading and listening. And so now we're postured within a couple percent of the all-time high. You know, we've dug ourselves out of this 12 or 14% hole. It's rebounded 12%. There's only a couple more percent to go to the previous all-time swing high in price. And so this is a market that I think it's closer to the Zeno stop now than ever. In fact, I took let's see when we get to the VIX, I took my exit in the double scoop of VIX I had, just because I couldn't take the idea of an overnight adverse move on two positions. I had 3R in hand, but on the double scoop, I just felt very vulnerable on that one. So with that move of that magnitude, it's just hard for it to get any steeper, and it would be normal for it to roll over. So when it rolls over, it comes back towards this baseline. Now, this is not the market getting, selling off. It's just simply you get that just on a sideways move where it's moved to a new price level and then held and then chops around there for a week or 10 days. You'll get that same kind of move. So don't think that this has to be a roller coaster. The chop is a very hard condition to get longer term swing trades in. That's where shorter moves from side of the channel to the side of the channel are favored. Things like 5DD, 551W can help in that regard. The next one I want to talk about is to go over a question and answer did with Catherine. I thought she had some really good insights in here. So I just want to review her message from the message board. So she's been thinking about improving choice of targets for swing trades. Is it important to be clear on what type of strategy you're trading? And she identifies reversion to the mean or momentum. She's trading currently three things: channeling, overreaction, and then a combination of 551W. And I assume this is the RLFF. And she says that her interpretation of channeling and overreaction is that they are reversion to the mean, and that 551W is more of a momentum strategy that looks for pullbacks in stocks that are in a longer-term uptrend, and then going to get a resumption of the momentum. Yes. I'll cover that down here. And then if that is accurate, which it generally is, would it be helpful to frame stocks and sectors in this way? For reversion to the mean strategies, look for sectors that are overextended in the main trend and or reach key points of resistance that might indicate the start of a pullback. And then for the momentum strategies, look for strong stocks and strong sectors that have pulled back and are resuming their longer-term trends. So yes, so the difference is this idea in number 2, you're explicitly looking for a strength filter. Whereas in the reversion to the mean, all you're looking, if that's our bell curve, you're looking for things that have had a statistically anomalous move, a fat tail move already, and it's going to cool off and come back to normal performance from either end of the fat tail. Whereas the momentum strategies are looking for things that are stronger than the market, pull back less than the market, and then start to resume sooner than the market and are still showing signs of outperformance. So that's clearly a momentum. You're betting on the strength of the momentum to continue. Whereas in the reversion to the mean, you had this extreme move already and there's no more left. It's out of momentum and you're looking for that thing to revert back towards normal performance. So with that definition in mind, her application of what to be looking for is exactly correct. And so I thought it'd be useful to talk about the swing systems in this context. So these are the ones that to me are clearly momentum plays, that we're looking for a resumption of the trends, resumption of moves in the strongest sector. So the triple screen and 551W are absolutely momentum. So triple screen, you recall, is long and strong on a weekly, pulled back on a daily, and then it has started to revert and to resume that momentum already. And you're buying the second day of momentum. So long and strong, orderly pullback, and started to resume. So yes, this is a resumption of the momentum trade. And that looks very much like the 551W trade, and that is that compared to 5 weeks ago, the market is higher. The market has gained some amount compared to where it closed 5 weeks ago. But then compared to 5 days ago, you have this, you have an odd pullback already. And then compared to yesterday, we have 1 day of momentum. So that's clearly a momentum type of a play. And you would prefer, like a triple screen, the strongest stocks in the strongest sectors given a choice. The channeling, the overreaction in 5 days down are closer to reversion to the mean trades. And that is you have something like a normal channel and price oscillates inside this thing with some regularity. And what we're doing is in the channeling, what happens is that this is all done above the 200-day moving average. So if that's the 200-day moving average, and your little channeling action is looking like this, so it's outperforming the market, and the market is doing well, then you're really buying these oversold conditions, selling the overbought, buying the oversold, selling the overbought. So this is really a reversion back to the middle of the trading channel. So that's a reversion to the mean in a nutshell. Overreaction is the same kind of deal, that only in this case you have your normal channel moving up, and then you get this one anomaly play way down here, and you think, wow, I got to buy it on sale. That was just an overreaction in the market, and its fair value is still back where it was, so this thing is going to revert back to that previous price. So in that sense, it's a reversion to the mean. And then the 5 day down is really something that just says, look, we think there's some kind of fair value on this thing that goes back longer than 5 days, but you had 5 days in a row of lower closes. That's such an anomaly that can't be the right pricing level. That's like negative momentum, and so it's going to try to resume to whatever the appropriate new price is. Maybe it's down here. So that's really more of an opportunity trade that looks like a reversion to the mean. RLFF is certainly a reversion to the primary trend. because here you had the RL 270 and the 10 deviated from it a certain distance, and then you got the first little hook back on momentum. And so this is really such a fat tail event that we expect it to come back this measured amount in little steps of ATR until it gets back to this long-term price action. And so we actually expect that one to go over, to shoot over, shoot under, shoot over. That would be kind of perfect, because once things are here, you can actually put a tight band on the computed fair value, and then by the breakouts, you can expect it to overshoot, and then momentum takes over, much like dominoes. So the RLFF, I would say, is certainly reversion back to the primary trend. The next one, let me also say, if the 270 and the 10 are all in a nice tight little channel in here, what you really have when you do a bracket trade on that is you really are playing for a diversion from the mean. So it's a breakout from the mean in that sense. So it's not a momentum play. It's just a statistical probability that things cannot remain that quiet forever. And you get that notion because of the tight compression in the sideways channels. So it's sort of a coiled spring sideways quiet channel, which is the essence of our Z3 PO system on the intraday. Now, inside the RLCO framework, 1, 6, and 7 are certainly reversions to the mean. No doubt about that. Pattern 1 is that the 10 has crossed over the 30. So you get that RLCO outside the river, and you're playing it back to that downward sloping Bollinger Band mean. And so you expect that target to be hit up here. So in this case, the 30 period Bollinger Band, the mean of the river, the BB mean, is the mean that we're reverting back to. So that's P1. 6 is the Anderson regression line stretch. That's where you get that dramatic move, and then the 10 period rolls over and starts rushing back, and so you short it, and then you cover it where this slightly lagging 30 period regression line is. So you're playing just for that measured move. And then pattern 7 is a reversion to the mean because of a statistical excursion. The price went out and touched plus or minus Z3, and then we buy the we wait to see the reversion back to the mean, and we buy that or sell that at Z minus 2 with the target of the far side of the river, so in order to give 3-to-1 reward to risk. So that's 1, 6, and 7, certainly reversion to the mean. 2, 3, and 4 are those continuation patterns where you have this one, it worked, and now you're getting this next move. And so this little segment of the trade right here, this looks much like that triple screen in the 551W, and so that makes it a momentum play. And then the only difference between 2, 3, and 4 is where the support level is found. So on pattern 2, it's vicinity, the Bollinger Band mean. Pattern 3, price got out of the river altogether and then came back and found support either at the river's edge or the dragon or the Bollinger Band mean. So 1, 6, and 7 are certainly reversion to the mean. And 2, 3, and 4 then are jumping on that resumption of momentum. Now, RLCO5, the sideways quiet channel, And the Z3PO and the Z3PC, those are just special forms of the of sideways quiet channel. And so what that looks for is volatility. The Bollinger Bands have pinched, and then we have price stuck in the middle, along with the RS10, the RS9, the RL30. All of that stuff, price and both regression lines are inside the river, and then you get the breakout. So that's really like that one form of the RLFF. It's a divergence from the mean, and you estimate the size of that move based on the last couple excursions from the mean, because you want to see how much power the traders have to change the perspective on the fair value in that symbol. The frog itself is pure momentum. It says, hey, once you start moving in this direction and you've moved one frog box, then it's time to enter short. Or if you started here and it moved up and it moved a frog box off the bottom, this is where you must enter it. At a evidence of momentum, the first non-noise movement. So those are my answers to Catherine. I thought she had a really good question. This really is a way to also to think about filling out your worksheet on the curve. Is what kind of spots on the curve favor these different strategies: the reversion to the mean, or the or breakouts, or trend following. And then the washout pattern. To me, the washout pattern is a reversion to the mean, in the sense that it's almost like a P7, but on a daily. It's been so bad for so long, and it's bad on the short term. It's just bad. And then what you're hoping is for the momentum to stop and for it to be a trend reversal. So it's not a momentum play. If it was a momentum play, you would be looking to go short it when it fails. So the washout failure, the WOF, I would say certainly is a momentum play. And so I don't think of it as a breakout, because it hasn't really got stuck in a channel. It's just had this enormous selling trend, and now has shown the first hints of life. And so it's an attempt to get in there early in the spring and get a quick planting, and then a rapid harvest. So I thought a really good question from Catherine on that. Now I just wanted to share this one with you. This is the power of attitude and having respect for the game and knowing the market conditions. If you ever just feel like blowing off the market conditions, like it doesn't matter, then I want you to remember the look on this guy's face. So he's from a little church group in the States, and he goes over against his parents' wishes to visit North Korea. Beautiful North Korea. Best Korea. And somebody in his church group asked him to get a copy of a poster or a picture of the chairman. So he was seen sneaking around and then stealing a Kim Jong-il poster from the North Korean hotel. Well done. And on the basis of stealing that picture, 15 years of hard toil. And this isn't hard toil like you and I think of hard work. This is hard toil as defined by North Korea. So there's nothing happy about that. So when you think about taking shortcuts in your rules, and you think about not paying attention to market conditions or blowing it off, or just trying impulsive behavior, I want you to remember that the market is like North Korea. And I want you to study the look on this guy's face as he thinks about what 15 years in a Korean prison with hard labor is going to look like. Not a pretty sight. That is not a happy face. That is a sad, sad face. Yeah. So forgive yourself for the trading that you're about to do. You know, keep your nose to the grindstone, but pay attention to those market conditions. And then along with the this emphasis on personal qualities, let's stay below the line over here. It's not everything above the line is somebody else's fault. That's the blame game. Everything below the line is, and this is probably a result of my old Catholic upbringing, everything is my fault, like I have a problem. But it's about responsibility. Who's responsible for the size of the position? Well, I am. And who is responsible for me violating my risk parameters? I am. Who let my chimpanzee drive? I did. Who failed to exercise discipline? Well, I did. And who didn't know their target enough to know that earnings season was coming up and that they needed to adjust their risk parameters accordingly? Well, that's me. So let's just strive to keep our attitude down here, to be personally responsible for our stuff, not to go crazy over it. But remember, it's not the other guy's fault. He's just in there trying to do his thing. The fault is in our stars. All right, so I was working with Yasik today, and I was reviewing in the chat room, and I was looking at his trades, and I feel like he's over trading, and he's got all the patterns in his head that he wants to trade, and he's very eager to trade, and he's burning his ammunition way too early in the day. He's not taking a measured shot. And so what I wanted him to do was to concentrate just on one particular pattern that I want him to really look for, and to work on impulse control and focus. And so I thought this would be useful for us. So what I'd like you to do is on a piece of paper, start sketching as I describe this condition. This is what I look for. This is kind of my bread and butter trade. It has elements of that chaining trade. So I'd like you to think your way through this. The first one, setup condition number 1. There's a successful 1R move in a hybrid frog. So the day has started, and there's a hybrid frog. A hybrid frog has made a 1R move. So there was a measured move already that day. So that really means 2 frog boxes, because we bracket the open with a frog box, and then it has to move. It has to leave the open, go that far, then we're in, and then it makes a successful move. So it's made a 2 frog box move in one direction. The next thing, so that's number 1. So start drawing these word pictures, doodle, if you will. The second one is that we look for an RLCO outside the river. And Once the RLCO outside the river has happened, then the RL10 crosses the dragon. That's setup condition number 3. The next thing we look for is the RL30. The RL30 has bottomed and is starting to curl upwards. And then setup condition 5, the dragon is curling upwards, moving upwards, has a positive slope. Then we just enter. Note 6. And our initial stop is below the lowest low of the RL10. And we remember from the regression line videos that the RL10 is the same as price for a trader. So our initial stop is below the lowest low of the RL10. So and then the management note number 8, leave that stop in place until the Z minus 2 line has started to curl up. Number 9. And then use the Z minus 2 line as the stop until you have 1R in hand. Yep. Just spilled my coffee. So read those, and while I mop up my coffee, the dog startled me. And in that space, I'm going to come back after I mop up this coffee spill, and we'll see what my sketch looks like, and we'll compare it to yours. So take 5 minutes. Okay, about 3 minutes left. Fortunately, my wife is at acupuncture, or I would have about 3 minutes left in my life if she saw this mess. Oh, man. Okay, about 1 minute. Okay. So my quick sketch, I'm thinking about, that's the open, and I've put a frog box on either side of the open, and price moves out. And when it moves a full frog box out, there's my entry short, and now we've got a 1R move to the downside, so that's what the price looks like. And then price starts to roll over and move up. And we know that the 10-period regression line in blue follows price pretty quickly, and it starts rolling up. The 30-period regression line is slower to move, and it starts to roll up. So now we have pattern 1. We had a successful hybrid frog move, so that's number 1. Number 2, we have the RLCO has happened. Number 3, let's see, the highlighter is going to play the role of the dragon. The dragon rolls over pretty quick because it's a 10-period regression line, or a 10-period Bollinger Band, excuse me. And so now the 10-period regression line has crossed the dragon, so that's number 3. Now the 30-period regression line has started to roll over and curls up. That's number 4. The dragon is curling up. See him rolling up. So that's 5. So now we're going to find some easy way to enter, like when a candle takes out the previous candle. So we're going to enter. That's number 6. Number 7, the initial stop is below the lowest low of the RL10, so we're just over here. So that's our stop. That's our trade frame now. And we're going to leave that stop in place until the Z-2 line has started to curl up. And what I mean by that is a lot of times you'll see the mean is here. You'll see Z plus 1 and minus 1 and Z minus 2 down here. And then once price has turned and started to go back up, at some point you'll see the Bollinger Bands start to turn and follow along with it. And what we're looking for is when I see that little turn up, that means the Bollinger Bands have now started to follow the price, which is moving up. And I know that the price has moved a significant enough distance up that it's pulling the river with it. And that tells me it's time to start. It's no longer a noise move. The move is definitely up. And so we keep the stop in place until the Z2 line has started to curl up. Then we use the Z2 line as the stop until we have 1R in hand. And after we've had, there's 1R. Once we get that 1R in hand, then now you can suffer and like I do and try to come up with a satisfying closer stop that allows you to preserve profit. And that's where you might think about the Bollinger Band mean, the belly of the dragon, the southern skin of the dragon, or the PSAR, or a money management stop, half a frog box or something. Something that improves your profit retention on the Z-2 line. Okay? So compare my little sketch to your sketch. Yeah, Dave says, can we use those setups for swing trading and not intraday? And I'm going to say absolutely yes. And the reason is because this RLCO and Bollinger Band framework is time independent. It's the same pattern intraday as it is on the swings. And so what I asked Jacek to do in the chat room was to draw the sketch, like I have just asked you to draw the sketch, and did your sketch look like mine? And did you follow along as I was sketching? Does it make sense to you? And then what you're going to realize is that this is available to you on a swing trade basis as well. Because what I asked Yasik to do was first look at the instructions and then draw a picture of what I was describing. And then I asked him to go to one of his favorite trading symbols and then find that pattern and then post that in the chat room. So we'll see if he does that. I think he will. He's pretty conscientious. And so the first example that I provided is not a day trade at all, but it is a swing trade. And it's in the Dow 30. So let's follow along. Setup condition number 1, a successful 1R move in a hybrid frog. And so if we take this to be the opening, we put some kind of frog activity on it from the Bollinger Band mean. I'm treating this move as a big frog style move. It was a breakdown from sideways quiet channel. She had this really nice tight sideways quiet channel, and then the breakdown occurred. To me, that's what you might say a hybrid weekly frog would look like. This collapse of support right here, this failure, is what leads to this large directional move. So condition number 1 is in place. That's at least a 1R move. Has to be. The next thing is I'm looking for condition number 2. Look for an RLCO outside the river. So in pattern number 2, that's a pattern 1 in the RLCO, and that is at notation point number 2. The 10 has crossed over the 30 outside of the river. Let's see here. All right, so number 2, you can see the RLCO has happened outside the river. Number 3, the RL10 has crossed the dragon. So number 3, you can see the blue line has now crossed the dragon. So that's number 3. Number 4, the RL30 has stopped failing. It has bottomed and is starting to curl up. So condition number 4 is met here. So we had to wait that long before the 30 confirmed the move. For a weekly hybrid frog box, you could look on the frog report that comes out every day and find what a weekly frog is. However, you could also use the standard deviation of the river, the weekly river, or the a Z-score on those daily charts. But look on the frog book. The important thing is that it was a breakout from sideways quiet channel on the swing chart. So number 4 is that the 30 has bottomed and is starting to curl up. So the 30 was this one, and then we got this favorable price action, which caused the 30, instead of continuing on, has now gotten flat and started to roll up. Condition number 5, the dragon is curling up, and now you can see that the slope of the dragon is up, and it has a higher low. The low on this one is at the red line. The low on this one is above that. So we have a dragon that is curling up. So that's condition number 5. So now all we got to do is note number 6. We just got to enter. And so on this there was a you can't see it behind the blue, but we got a higher high on the candle, so we enter at the green line. We're on the correct side of the dragon. Just enter. Right there. And then our initial stop. Let's see. So our initial stop, note number 7, is below the RL10. So our stop is down here at the red line. So we've got this action going on here. Entry at the green line, stop down here at the red line. And we're going to leave that stop in place until the Z2 line has started to curl up. So that's note number 8. Over here by note number 8, you notice in this highlighted area that the Z2 line has started to slope upward. So at this point, we can start moving. So we're already into this 1, 2, 3, 4, 5, 6, 7 bars, and then the RL or the Bollinger Band Z2 line started to curl up. Then note number 9, we're going to use this Z2 line as the stop until we get an R in hand. All right? And then we'll just adjust from there based on our own judgment. So let's see what that looks like. So if this is my risk box here from the green line to the red line, then my 1R line is this purple line. So here at position number 9 is where I no longer use the Z-2 line in this idea. So where could I put my stop? I've got an R in hand. I could use the Bollinger Band mean. I could use the PSAR. Use the southern skin of the dragon. Anything you want. Oh, I'm sorry. This was the Z2 line here. Sorry. So my red line was a little high. This is how I would do that. Right. I like this stop just below the RL10s. And at 8, you can see that Z2 line has increased. This feels like a pretty far gap. So if you moved up to the Z-1, that wouldn't offend me. If you moved up here to the Bollinger Band mean, that would not offend me. If you picked half the distance, that wouldn't offend me. If you picked the PSAR and got stopped out here and then re-entered here, that wouldn't offend me because you got 0.7R in hand. And then your re-entry allows you to keep going. So that's what that pattern looks like on a swing trade. That's bread and butter. So if you step back and look at this at the macro level, you got this great big cluster in here. Notice how tightly compressed all this stuff is in this sideways quiet channel. Look how pinched the Bollinger Bands are. And so all we're going to do is take the breakout from the Z3. That's just a Z3 breakout. That's all that is. Then you get a big move down. Okay, that's the equivalent of a hybrid frog move. There was a big measured move down. It got everything out of the, now see, notice nothing is in the river. That's the definition of a trending move. So you had a trending move. Look, it got all the way down to just about Z-3 down here. Once that's in place, now You get the RL price improves. You get an RLCO. The 10 got through the dragons on one surge already. It's not unusual to see that fail one time and then go. And now what you have is the lazy W. And notice what a nice job the dragon does for you. It doesn't matter. It doesn't matter how many days, Robert. As long as it doesn't make a new swing, as long as it, if it doesn't make that move, but it just fails, well then all you do is you get short again, because the size of this downward move is the size of the next downward move. But if it doesn't fail further, then it's going to get better. And now the move is going to be this. In this, what you have right in here is this big hesitation zone. It's no longer failing, but it has not yet moved out smartly. This is that congestion zone. If it does not give you condition 4, like the RL30 is bottom and started to curl up, if it doesn't give you that, that means it's failing. And the size of this move is the size of the next move. And you know how to, by that, in fact, what you can do is, if the RL10 didn't even get through the dragon, and you have this P1 comes up and then it starts to fail right away, that's P1F. That's your favorite pattern of all time, because that's a lazy W in the other direction. That's the easiest one to believe. So if this had done this, and then the 10 didn't get through the dragon at all and just rolled over and failed, as soon as it takes out this swing low, not later than that moment, that's when you got to get short again, because the size of this move is the size of that move. But the RLCO worked. And we say it worked because the 10 got through the dragon, and then later it didn't fail. And we know it didn't fail because the 30 got better, and the dragon is shaping upwards, and the RL10 is on the correct side of the dragon again, and so we're in. Yes, this looks exactly like the day trade, only this case it was a swing trade in diamonds. And this has been a massive good trade, which, as we've been, this is nothing more than the trade that I've been doing in the swing trade portfolio for this workshop, just marching it along all the time. Go back and look at all those commentaries, and you'll see me. That's exactly what that's where I took the Dow. Right here is where I took the diamonds trade, and this is where I took my second trade, and it's going to go all the way up here and reconnect. And if it gets above this level, it's at an all-time high. No worries. So when we have these corrections, this thing was supposed to come over here, but it didn't. It came all the way down here, moved all the way over, and now is moving all the way back up. There's this great big shark bite. Took a big bite out of everybody's portfolio. Well, it wants to go up. So this is what I've asked Jacek to look at, and just trade that pattern so he can learn to conserve his shots. If you shoot all 4 bullets and you're done in the first 15 minutes, well then, you're trading too fast. Try sitting on your hands. So what's this look like intraday? All right, well, here's one on Caterpillar. Please notice, it's tight congested pattern. Get a breakdown. Here's the step 1. It makes a frog box move. This is intraday now, but it could be a swing. It doesn't matter. So there's his frog box. It made the measured move. That's 1. Here's the RLCO number 2 after it made the measured move downward. Here the 3, the RL10 has crossed the dragon. 4, The RL90 or the RL30 has started to slope up. The dragon is sloping up. We get right in here, we get an entry at 6 in that candle right there. We put our stop down here below the RL10 and just keep it there until we get an R in hand. At that point, I would say, all right. In this case, that initial stop was with the Z2. So here, you decide how far up the stack you want to go. So here's where my stop is. Now I've got an R in hand. Do I want to raise it to Z-1, to the RL270, to the RL90? That's not bad. Can I raise it to the Bollinger Band mean and use that? That's not bad. Can I go halfway between the mean and the river? Sure. Could I use the bottom of the dragon? Sure. Could I use the peace art? Yes, it keeps you in the whole way. And then you get this nice little burst right here. You're nuts if you don't move up to the middle of the dragon and then just take that. That's 1.5 R in the middle of the day. And this thing went on to do even better. But that's chain trading. So there's one for a swing. There's one for an intraday. All right, this is in WYNN, W-Y-N-N, standard practice. 70 cents right from the opening. This box is 0.7, or 70 cents. This one is 0.70 cents. Get your short here. Hey, the hybrid frog, it gives you a +1 here, but maybe you say, oh, but what if I got out of here? Okay, then you got out there. But now there's another great big ass move. This is 2, 3. That's 3 hybrid frog boxes down there. So according to the way we teach the chain, hey, when the bottom side of that dragon gets violated, the first move was down. I don't care whether you got all of it or not. The first big move is down. When it rolls over at the VWAP and then starts to collapse again, when it takes out the bottom of the dragon, I get short. But you have to get short not later than here anyway. So wherever you get short, you get short. And now you've captured the second leg down. And what I want you to notice is that the size of the first move is the size of the second move. That move is the same as that move. So now let's look at what we're in. All that is just you don't even have to trade that. All you got to do is watch for it and see what happened to the guys frantically trying to trade the opening. That's just setup condition 1 anyway. Let's see, let me pull this down a little bit so we can see. All right, so pattern number 1. We've had a successful 1R move in this downward direction. Setup condition 2. Look for an RLCO outside the river, so you do. Number 3, the RL10 has crossed the dragon. He did. That's, by the way, on this collapsing. Let's just talk about the RLXD, and this works on a swing trade too. So, this work. Here's where the RL10 crossed and failed out of the dragon. That's where I get short all the time. When the RL10 crosses the dragon on the upside, that's where I cover all the time. That's a 2R trade. Lather, rinse, repeat. RLXD. That's a freebie. So, number 3, the RL10 crossed the dragon. It did. Number 4, the RL30 has bottomed. Here's the RL30. Gets flat and starts to curl up. Here's where it's already started to curl up in 4. Condition 5, the dragon is curling up. It is right here. That's number 5. Number 6, just enter. Just enter. But what's the, just enter. Just enter. What's the specific pattern? Just enter. Put your stop down below the RL10. Leave that stop in place until the Z2 line has started to curl up. Here's where it starts to curl up. That's number 8. So in this case, the Z2 line was pretty close to the Bollinger Band Z2. Let's take a look at that a little closer. All right, so if we look at this one, the Z, the initial stop line is here. So there's our 1R. That's the size of our box. Here's the Z2 line. Here's where it catches, it connects back to our stop. So let's just keep that stop in place. Now we're using the Z2. The Z2 has started to curl up until we have 1R. So if this is the 1R box, this green shaded box is the 1R gain. At position 9, this is where we can start thinking about adjusting our stop. So the Z2 line started to go down. Never lower your stop. So just keep that in place. Right around here, it would not offend me if you started using the 90. Use the 90. Go ahead. On this one right here, if you want to take that one there and cash 1R, knock yourself out. Take an R. Get paid. Not going to hurt my feelings. So this is WIN, W-Y-N-N. The range stat on WIN is about $4.50. So here's the low of the day at 90. This thing can go to 94.50 to the range stat. So I don't mind owning this with 1R in hand with a wide stop. Notice how the 270 has slowly started to curl its way up. And we've got a range compression here on our Bollinger Bands. And this blue line is the opening of the day. This thing just gets to 93 just to get back to the open and then close the gap. Guess what it does the rest of the day? It gets to 93, and it's an inside day. That's an absolutely normal move inside WIN. So that's my guidance to you. Try that pattern. See if you can sit on your hands. Start chaining these things together. It starts off with that hybrid frog, simplest amphibian known to man. Just get in. That's all I do right there. There's the open, is the blue line. Put my set on WIN. I put my 70 cent on either side. Take the first one. Relax the trade. If I cash this one because it got down here and started coming up in an RLX10, so I cash a micro trade, okay, fine. Up, it didn't take off like I thought it would. Instead, the dragon rolled over and it collapsed below the southern skin of the dragon. That's an auto short. I'm on that one like a fat kid on cake. And there's my trade. Boom. 1.5, maybe 2R. Exit at the RLCO. The chain begins. Now I've got my significant move in one direction, RLXD or RLCO has occurred. The RLXD has occurred. The 10 is still across the river. The 90 has improved. The dragon's opening up. Go. Just enter. Put a stop underneath this swing low, see, and then just manage it. See what happens. Don't try to get in here and micromanage on 1 minute charts with the 2-bar low on 1 minute. You'll never get a move like that. Just let it go. Keep that relaxed stop. Keep that initial one until I get an R in hand or the Z2 has caught up, and then use the Z minus 2. Stay with it, stay with it, stay with it. Use the 90. Go ahead. Cash an R. And then stay with it because you know what the potential moves are during the day. You know what the range stat is. You know how far this thing can go. This still has a very frameable trade just to get up here to close the gap. It looks like it wants to close the gap. It had 1, 2, 3, 4, 5 opportunities to fail, and it didn't. And win is on a long-term big win. And we've got a swing traded in on the long side with 2 positions. This thing wants to go to 102. You know? Trade at a level at which you're not sweating the 1 second charts. All right, questions on that one? Those charts, those flashcards are in the chat room. I'm going to hang this slide deck in our file section. Let me find, where's my... So it's 9:15. Let's take a 6-minute break. Sorry, let me unmute myself. Now we're back. So there were some questions. Gil asked, what's the hybrid frog box for the week? Go to the weekly column on the frog report that comes out every day as part of the daily. So this is the daily frog. This is the weekly frog. Next to it, as you might guess, is the monthly frog. On treasuries, it's $1.18 or round off to $1.20. His weekly range stat is $4.40. Let's go down to diamonds. TIA. His weekly frog box is $2.47. All right, how about now? Sorry. I'll trim all that out. Can you hear me okay now? All right, so there were some questions. Gil asked, what is the weekly frog box? Go to the frog report on the daily. This is your daily columns, your weekly columns, your monthly. So the weekly frog box in treasuries, it's the SD number. In treasuries, it's $1.18. In diamonds, it's $2.47. In the S&P, it's $2.73. The range stat is the average weekly range plus 1 standard deviation. So it's the range stat. It's the same definition, but now on a weekly chart. So the range stat on the S&P right now is almost $10. That's a 5% move because it's trading up around 200 right now, right? So any questions on how to read that one? That's if you wanted to adapt this idea to the weeklies or to the daily charts using the frog box. That's how you would do it. Let's see. Patrick asked, do you take P1s without the RL30 flattening? If you do, then you must be that much quicker at catching it failing. And then you get the P1F. So in Apple, here you got an RLCO, but the 30 is still doing this crap. The 30 doesn't get better until here. You're better off treating this as an RLCO and now buying this, or like we did, buying it right here instead of trying to buy it. If you buy this one, you just got to be ready for that thing to fail sooner because it's still too much of this psychology. In order for this psychology to lose force, you have to see enough price action like this. That kind of sideways price action is what causes the 30 to flatten out and start to creep upwards. So this downward psychology, now this sideways price action, instead of it failing further, it went sideways. And that caused the 30. Look how that 30 nice and gently carries it around. And now the 30 is rolling up. This is where you want to buy, down here. If you take this P1F, you might get that first pop, but this is one that didn't even get to the Bollinger Band mean and started to fail. So you have to play that. You have to get out of that trade right away. If you buy this RLCO right here, you're getting out of this thing in a hurry. That's how you get chopped up. So you want to play the failure on that P1F. But if that thing doesn't fail, this one didn't work, that one didn't work, guess what? It's going sideways. So just wait for the 30. What's the hurry? If this thing, I mean, this is Apple. It's not going to go to zero. Everybody's got to own it. It's going to come back to here someday. So let it get nice and settled in here. What's the hurry? Let the 30 roll up. Comprende? So Robert asks, if we went to a weekly chart, could we do weekly RLCO as a BMR substitute? Yes. Yeah. You can do this on a daily chart. But if you go to a weekly, it looks the same way. The interpretation is exactly the same. And it's smoother on a weekly because you have less gap activity. We'll look at that one next week. Because I want to get through the portfolio review. Okay. Any other questions? The charts and the flashcards are in the chat room. I'm going to hang them in our files section too, so you can review them along with this set of slides. All right. So let's get on with the. It's 9:30. Let's get on with the portfolio review. So Apple. Okay. You know. Now this will be all you can see now. As you see this, the 30 is improving. You have the RL10 has crossed the dragon. It takes off. You put your stop down here below, at the Z2. When you get an R in hand, start adjusting your stop upwards. You can't miss it. All right, so here's where we are now in Apple. We cashed our first winning trade. We got the re-entry. We're still in the money on this one with our entry here, our stop here. There was no follow-through today. I'm going to use the PSAR as my stop on that one so that I lock in that couple bucks. Amazon, minus 1R today. So we took our entry here, aiming for here, didn't get it, hit our stop. American Express, we got our first trade in the book to here. Got our second. This is that resumption. It didn't fail back to the Bollinger Band. The river is now sloping up. So we're long from 59.50 with about a buck. Give this one. Here we are. Or no, I'm sorry. We're long from 60 with a $2 stop. So we're about 0.7 R in hand. All systems go, looking for this price and then this price. At this price at 64, I'll add a second. Caterpillar, cashed our good first trade, got the re-entry on the 1, 2, it sold off 3, the dragon held. The 10 never even came through the dragon, so we bought this trade frame here at 72 with a $1.50 stop. We're 2R in hand. We got our second entry yesterday, or Friday, excuse me. So we're still in good shape, looking for 80. CPGX, we bracketed this. We got our entry on Thursday. Good follow through. We're about 2.5 R in hand. I'll be moving my stop on this one up to here. Chevron, I took the exit today. Energy started suffering. This has been a really good run in energy, and that's tied so strongly to the commodities I wanted to get paid. So we're out of that one. I'm looking to start to trim some positions now more than anything and cash them when I got them. Yeah. And so we got the entry here, stop here. We're slightly in the money on DuPont. Dollar General, still bracketing this big run up. I'll go long if it gets above. I'll go short if it goes below. Diamonds, this is the usual. We got our first entry back here. Second entry here. I'll add a third position at 179. We're still in the money on Disney. Our entry is here. Our stop is here. Fractional win, maybe 0.5. Dow Chemical, our entry was back here. We moved our stop to here before. We got our second entry up here. I'm going to move this up to the southern skin of the dragon. Actually, I'm going to move it up to the PSAR, so I'm break even on the second position. I want to lock in a nice win. Devon Energy. See, this is one where in the energy sector, rather than fighting Chevron, which was going nowhere, Devon Energy, we've already cashed one good one in this mid cap, got the re-entry here, and now and our initial stop was down here, and so we're going to move that stop up to the 2-day low. We're in almost 3R in hand on that one. Emerging markets. Re-entry. This is one where we played short, had a fractional win, re-entered on the long side after the Fed. We're in good shape. Our stop is down here. I'm going to raise the stop up to there. Mexico. Re-entry in the usual way, in good shape. Brazil. Got a re-entry. We're here at we've cleared this hump. This looks very promising. So again, you may notice this pattern here. Look at the 30 had sloped up. We bought the continuation pattern on the rising dragon. All signs pointed to yes. We got, let's see. Oh, our re-entry here in, this is South Africa with the stop here. Man, we're like 4R in hand on this, and we got a nice follow through. So we have to raise our stop to a 2-day low. Facebook, we shorted, or I'm sorry, we went long, got the 1 hour loss, watched it march up, finally entered. We're slightly in the money, but not really going very well. That's looking like dead money. Cashed a winner in China, got the re-entry, working with our stop down here from an entry here. That's about 2R in hand, so we want to preserve that one tomorrow. The Google entry here on this trade frame. This was a 1, 2, 3 off the bottom, off this channeling trade, and we're about 2R in hand. I'm looking to add another position if it gets above this hump on the 10. Goldman Sachs re-entry here, about 0.3 in hand. Latin America, we already have Brazil, so that's just for monitoring. We had a nice move off the bottom here in the small caps. You know, the small caps have been the worst sector among the big fat ones. So here's that pattern again if you're just playing along at home. A support shelf in a downward sloping market. It collapsed. Boom. 1, boom. 2. And now look, the 30 has rolled up. Here's your RLCO. This is our entry. Bam. Orderly pullback. Second entry, looking to get up all the way back up to here. So, Patrick, that answers your question. Why would you? Only if you have nothing better to do. If you have nothing better to do, go work out instead. But yeah, I take them. I try them. I just dial down the time frame and go. Because remember, these are daily charts. These same patterns are working intraday, and I can be turbo in these. So the real estate, again, this is all you can see anymore. It collapsed out of the shelf. 1, 2, RLCO. The 30 has improved. That was our entry. First trade, re-entry, second trade. We took our second entry here, but our stop is right here. So I'm trying to get some more out of this thing. It's got to go tomorrow or I'm out. Next up is Morgan. All the usual. This is just our first trade, so we just went slightly into the money on that one. We entered it on Friday. Coca-Cola. We have not hit our re-entry point up here. We had a nice trade from here to exit here, and we're still stalking that one. Low. About the resumption of the trend. We're well in the money on this one. I really want to see it get above like 78 to add a second position. McDonald's. We raised our stop from here. So we got our entry back here. We got our nice move. It's close to this Zeno location up here, but it's tight. So I'm not going to let this get away. But if it gets above here, I'm looking to add a second position. Microsoft, our entry is here. Our stop was here. We're about 2 hours in hand. Oh, and I'm sorry, we hit our exit today, so I didn't notice that on my first. So there's our exit. We're out of Microsoft. Nike, still in the money. Our entry was here. Our stop was here. We had raised our stop here. I'm going to go to a 2-day low and move it up to there. Getting ready for a second entry on that one. Procter & Gamble. Our entry is here. We're in the money a little bit, about 0.5R. spiders, SPY, excuse me. This getting close to this Xeno territory up in here. I mean, I like it, but this has been one heck of a move. That 30-day move is the second or third best in the last 10 years. So I feel like we're closer to the end than the beginning. Treasuries finding a stable base here. Tesla, our first entry was back here on the RLXD. Our second entry up in here, and has completely taken over this one. Off it goes. I'll add a third position up here. Yay, Tesla. United Health, this one is working. Remember we said if it ever got above this purple line, it could really go. It's starting to really go. Recovery of the healthcare sector. Oil, we got our re-entry here, but it's kind of stalling. It's hard to turn that thing around. And it's had a nice 20 or 30-day run right here. So I'm cautious on that one. I cashed this double scoop of VIX today. I just, as we're getting close to the Xeno stop up north in SPY, we're in this congestion zone down here, and I don't want a double scoop with some of these adverse bars working against me. So I decided this was about 3.5 R because we were initially short here, added a second position here. This was 3 R in the combined position. I just felt like that was a good place to start trimming my exposure and raising some capital. Verizon, continuing to march. We're going to tighten up our stop. Walmart, entry was here. It's still kind of dead money. No, I'm sorry. We took our exit here, and we're just stalking this. We're out of Walmart. My bad. Missed my arrow. Win. This was that first one and cashed. It held, re-entered. I like the recovery today. That was nice. And again, this thing wants to go to 102, so I'm going to turbo the crap out of this thing to protect the win on the swing trade. But it made a nice recovery today. You know, this little recovery up in here was nice. And let's see, metals and mining. The re-entry works nice here. And we're about 1.5 R in hand. ExxonMobil. I'm just using Devon Energy to actually play the trade because it is a better shape than this one. But again, I just want you to notice the importance of the RL30. When it rolls up, when it makes the turn and the dragon is shaping up, and the RL10's out, this is where you got to buy it right here. And you're in the pocket. Got all that stuff supporting you. All right, so that's 947. That's about everything I want to cover. You got some work to do this week on those the regression lines and the Bollinger Bands explanatory videos, where you kind of deconstruct the framework and talk through some stream of consciousness stuff. Dave asks, for using this framing technique, it looks like reward to risk is on the 30-day high. Yeah, I think so. It's really whatever your initial. We're trading from Z-2 to Z+2, really. When you see that 30-day high, when that big a chunk is taken out, it's actually relatively easy to find the 2-to-1s. Do I post these trades somewhere? Well, I mean, I've been posting them in the chat room and in the workshop as we've been going. You'll see the videos. I've been recording 2 to 3 videos a week, monitoring these. But really, this is for you guys. This is what you paid for. I don't offer this as a service. to anybody else. I mean, I teach them the systems and the framework, but this is really the first time I've systematically gone through this in this way. But this is the difference between strategies and systems. The systems will give you specific moments when there's a favorable chart pattern historically. You know, like the 551W. There are 551Ws firing through here. Let me show you one right now. I can tell you by inspection that this candle right here fired a 551W. Because this bar was a white bar. It's a white candle. It's lower than it was 5 days ago. It's higher than it was 5 weeks ago. And then we would buy the second day's momentum. So we would be long here with a stop here. So we'd be in the money with 1R on this one already. So I can tell you, if we went back and looked at the daily report, we'd see the 551 pattern fired on ExxonMobil there. So there are moments in there where those specific swing trade patterns fire. I just find that this visual interpretation of the Bollinger Band width, the shape and slope of the river, the range compressions, the slope of the dragon, the 7 patterns of RLCO, it just it's just so clear in my view that I prefer this integrated interpretation approach, because what I end up doing when I take the signals on the specific systems and the pattern trades is I end up using this framework to start gauging reward to risk ratios and comparing sectors to market and market conditions as a way to inform my judgment. So I have a number of reasons to get into it, but once I start managing the trade, I tend to manage them according to this style of framework. And so it just becomes a relaxed, strategic way to get into the trade and manage it as we go. And then because we have this fractal nature between, these regression lines and the Bollinger Bands, I just think it just makes sense to me. Robert asked me, are there any lines that I would take off? Well, I wouldn't take them. I wouldn't take any of them off. Every one of those things on there gives me actionable information. What I would do is go through the videos on the 2 explanatory ones on the RLs and the 2 on the Bollinger Bands and see which ones you would take off. For instance, under no circumstances would I take off the Bollinger Band 1, 2, and 3. I mean, those to me are just mandatory, got to be on there. And then to me, the Dragon's got to be on there, and the RL10's got to be on there because it tells you when you can first start safely buying. And then I got to have the 30 on there because I want to see it. I guess the only ones I would take off, if I had to take something off, or you were going to cut off my finger, the RL90 and the 270, but those things have very specific meaning. I can look at those and see what the relationship is on the weekly charts without going to the weekly charts. So like on this one, what I love about this one in ExxonMobil is that not only is the river up, and I mean, of course, so the Dragon is up, and the tactical traders. Remember, the traders are these guys fighting around with the 10 and the 30. Remember, that's the traders, the fast trader and the slow trader. The holders are the 90 has slowly changed his mind, and right about here, the fast holder is now positive. And the slow holder, the big fat guys, are slowly going from flat to up. So this whole thing has turned the corner now. Every single member of the buying public is now favorable on ExxonMobil. And notice how the volatility, the fact that they all confirmed means that the ranges are now consistent enough that the volatility is compressing. For a while, the traders were up, but the holders were down. Traders up, holders down. That makes the volatility bands the widest. But now the traders have convinced the holders that this thing is really up. So now the volatility is compressing. On a long-term basis, that move is just beginning. And I can see that from having the 90 and the 270. So I don't want to take those lines off because it helps me see the next bigger time frame. I mean, this thing was horrible for a long time. That 270 has been consistently down till here. It's been kind of flat. It just now, right in here, because of this chunk of a move, see how the 270 has now changed his opinion? This whole chunk, he was not impressed yet. That was all sideways, and it finished poorly. Look how excited the traders were to get this thing moving out of the barrel, out of the basement. And the 270 were saying, no, not really. In fact, this entire move up and it came back, the 270 says, hey, it now came back to fair value. Now he started his buying program. That's why I'm kind of bullish on oil right now. We've seen the bottom in oil. Yeah, and so if we looked at this on weekly charts, you could just dial it up, and then all you got to do is, let's see, same thing. There was that big downward move. That first up one, then the pullback. Well, on a weekly chart, that's the pattern I was just telling you about there. Because here's your measured downward move. Here's your RLCO. Dragon is sloping up. RL10 is up. The 30 has rolled over. You can buy this one right here. And you get the move from 74 to 88. That's a 20% move. And now all you got to do is preserve some of that. And now you look at this. I made a higher low in the Dragon. That's why the second move is the powerful move. So now I made that swing low with the Dragon. The Dragon made a higher low, and now the Dragon is up. The 30 is up. The 10 is up. The 10 is on the north side of the Dragon. You can buy it right there in that pocket as soon as it pops up with a stop right down here, and off you go. It's going to get above this. When this gets above 86, now it's going to come up to up here, and then it's up here. There's your price ladder on the way up. That's using weeklies. So if you're looking at 20 things, you got plenty of time to observe. So we're at 9:57. We're 2 hours in. I'm going to get this recorded. And, well, it's already recorded. I'll get it posted, and I'll hang it in the usual spot. You got your homework to do, some videos to watch, and some craft to practice. Take good care, guys. We'll see you. We will see you in the chat room, and keep your wrists measured and your powder dry.